Justin, thank you so much for being with us. Just walk us through what we can expect, because a lot of people have been saying, of course, they expect the Fed to cut interest rates. However, one of the major issues is the government shutdown means that there hasn't really been as much data for Jerome Powell to go on here.
It's all so exciting, isn't it, Zain? Like, happy Fed Day, and happy Fed Day to all our viewers. You're right. Like, trying to make policy in a moment when we don't have economic data would normally be a pretty tough task. And that's why it's actually useful to put this one into a little bit of context, which is, if you go back a year or two, the Fed had its foot on the brake. It was trying to reduce inflation. And so all it's doing right now is it's taking its foot off the brake and moving us back to neutral. So that's the sort of thing you might want to do, whether you had a lot of data saying that the economy's doing okay, or whether you had no data and you had no idea. This lack of data is going to be a real problem in future Fed meetings when it has to decide, all right, we're coasting now. What do we need to do next? Put our foot on the gas or put our foot on the brake?
Much up in the air, though, still, Justin, without the government shutdown and the uncertainty that looms around that. And we did hear from Jay Powell saying that there's no risk-free path. From your perspective, though, which risk is greater at this point, to start stepping off the brake and cutting interest rates now more aggressively, especially given the concerns about the labor market, or maintaining a foot on the brake with concerns that inflation still remains stubbornly high?
Mate, that's the only sort of question an economist ever gets. Which of these risks do you worry more about? What bad flavour are you concerned more about? Look, I'm honestly worried about both. We have seen that the economy is slowing. It's slowing quite dramatically. Just before the government cut off its data, we saw the labour market slowing, and subsequently the few indicators that we have suggest it may be slowing even further. And worse than that, we're entering this dark, data-free fog just at a moment when the tariffs seem to be hitting pretty hard. So I worry desperately that unemployment is rising. It's already risen a full percentage point over the last year or two. And the question is, could the economy slow even just a little bit more? If it does, then we're on the cusp of a recession. Yet, we have inflation around about 3% right now, well above the Fed's target of 2%, and a whole lot of inflationary action in the air, with a lot of the tariffs currently being eaten by corporations, but they're going to feed those through to prices over the next few months. And so, honestly, it's a very, very difficult sea to navigate right now.
Yeah, so based on everything you've said, specific on inflation, not exactly, of course, where the Fed wants it to be right now, not at that 2% target. How much room does the Fed actually have to maneuver here, Justin?
Yes, so there's a very deep economic question here, and let me try to make the point to viewers directly. Normally what we do is when there's high inflation, we say, look out, let's slam our foot on the brake. There's a specific kind of shock called a supply shock. A supply shock is when something happens that raises the cost to business. That, of course, causes them to raise prices, and that causes inflation. Tariffs are a supply shock. Now, the textbook over my right shoulder there says, when there's a supply shock, just don't worry about it, because what will happen is businesses will raise their prices. That will cause temporary inflation. But once they've raised their prices, there's no more reason for them to continue raising prices. So inflation, the rate of change of prices, will go back to normal. So the Fed could hope, just look through what's going on right now and hope things go back to normal. It tried a little bit of that during the pandemic, and it didn't work out so well. So really the question is, how much courage does the Fed have to believe that whatever inflation is coming is, let's use a word we heard a couple of years ago, transitory?
And we do have some new Fed board governors who I would imagine may be voting differently than others to have. Some of them, 2 of them, or 3 of them now, Trump appointed. So we'll see. Again, this one's sort of believed to be baked in the